Hello everyone, I'm Alexander of Trader Help 101 and thank you for joining today's lesson. Before we begin, please take a look at this disclaimer. I share my personal experiences for educational purposes only. I help traders learn the psychology of risk management. If you're having trouble with risk management, email me, alexander@traderhelp101.com, my website, traderhelp101.com. These links will also be on the bottom of this video. Click on them and let's connect. So if you're having trouble with risk management, I can send you some free information. Here's my YouTube channel. The majority of it will be talking about risk management because this is where traders really get hurt mentally, emotionally, and financially. And they blow up their accounts and do not gain the proper experience that they want, or their journey as a trader is shortened. So we're going to talk about how to avoid a devastating loss. And we have these subjects that we're going to run through and give you a little bit more of an explanation, and hopefully this hits home, and hopefully this will stop you from placing a irresponsible reckless trade, because we don't know if we place 15 trades which trade is going to be a winner or a loser. So therefore we should not have that much confidence in placing irresponsible reckless trades and breaking risk management rules. So let's start with number one, emotionally ready to be wrong. This is probably the cornerstone of trading when it comes to being wrong and exiting a losing trade. We all deal with being wrong differently. How we view ourselves when we made a mistake, if we view it as a mistake, when we have a losing trade, we deal with that mentally, emotionally, and financially differently, the intensity. And we must have empathy, and we must practice beforehand, before we even enter the trade. We must visualize us exiting a losing trade and being okay with that. So we have to be emotionally ready to be wrong. And it's perfectly fine to have a losing trade. It is wrong to have a losing trade go from a small planned loss to a devastating loss. And if you take a look at some of my other videos, especially the one that says categorize your losses, we have 4 losses. We have a planned loss, number 2, respectable loss, number 3, embarrassing loss, and number 4, devastating loss. So we don't want to get to a devastating loss. So practice, visualize, close your eyes and say, you know what? It's time to exit this losing trade, and it's getting me one trade closer to my winning trade, and this trade is either going to help my account or hurt my account, and I control how much it hurts my account because I have a trading plan. I'm being strategic and methodical. I'm not being reckless and irresponsible, and I'm treating trading as a professional because I know there's risk involved and I know I can be wrong, and I am emotionally ready to be wrong, and I'm perfectly fine with that. Let's go with number 2. You calculated your max loss. This is important because we're going to have losing trades, and we also want to know, if this trade's a loser, how much am I going to lose? And we dictate that. We can say, hey, I want to risk $100 on this trade if it's a loser. If this trade is going to be hurting my portfolio, I only wanted to hurt it by $100. So you can calculate how much you want to lose. So, and this is going to be done beforehand. So before you enter any trade, you must know, hey, I'm emotionally going to be wrong. I'm perfectly fine with that. How much is going to be my max loss? If it's going to be $300, $400, $500, and that's perfectly fine, then we enter the trade. And this goes with number 3. Know when you will exit a losing trade. As you're going to exit a losing trade, you must know what triggered it to become a losing trade. What criteria did it meet that it says, okay, it's time to exit this trade? Every trader has a set of rules to identify it's time to exit a trade. Just like a trader has rules to enter a trade, now we have to have rules to exit a trade. So now we are emotionally ready to be wrong. We know that if the stock gets to this point or does XYZ, it's time to exit the trade. And I also know that when that occurs, I will be down, let's say $200, $300, and I planned that. It's a planned loss, and I'm perfectly fine. Okay, so know when you're going to exit the trade. It should be repeatable, and it should be strategic. Let's go with number 4. This is an easy one, but we also, once again, we can get compelled to placing aggressive trades because of the potential of profit that the stock market can provide. So it's more important to trade safely for the long run than to have these big fluctuations in profit up and down, because emotionally it's going to be very, very hard to deal with that psychologically. And it can hurt your performance, and you will put unnecessary stress in your trading, and this can cloud you and make trading more taxing than what it is, right? Because then you're going to be stressed out that you lost money, and you're going to be stressed out that you're missing opportunities, not making enough. So there has to be a balance where you have a solid risk management plan and that you are able to trade safely. Number 5, trade slow moving stocks. You must build the resilience to see money move. Nothing has prepared us to trade. It's more important that we understand to build the resilience to understand how we judge our performance, how we have empathy with ourselves, how we deal with missing trades, how we deal with losing trades, and all these decisions that we have to make on a consistent basis when it comes to trading. Therefore, you want to slow that down and trade slow moving stocks so you could get a grip and an understanding about yourself on how you handle these trading scenarios and trading situations. Once you develop a certain resilience and a certain strategic approach that you know you're following the rules and you're not just trading because you want to, it's more strategic and methodical, then you can add more stocks to the picture and maybe add faster moving stocks. But build that mindset, build that mechanics that will help you in the long term, and let's not be so short-sighted. Number 6, know your worst case scenario for your portfolio. This is super, super important because you may be placing a trade that you're not able to afford in your portfolio. You may have 5 open trades, but if all these 5 open trades have a $200 risk and they all become losers, that means you have $1,000 at risk right now. So it's important to understand what is going to happen if all these open trades become losers and I have to exit these losing trades because they met the criteria for me to exit a losing trade, and they were all planned. Nothing wrong with that. They all met the criteria for me to enter, but they are now becoming losing trades and I have to exit these losing trades. So make sure you know where your portfolio stands at all times. This will relieve a lot of pressure and relieve a lot of performance anxiety, and more importantly, allow you to trade another day. Okay? Number 7, super, super important. With a solid risk management plan, this will allow you to plan for a losing streak. Take a look at my YouTube video on block trading to help you coordinate and plan out a solid risk management plan. So block trading, the introduction of only reviewing your performance after you have completed 15 trades, and this will allow you also to understand to plan for a losing streak and how to allocate risk on a per trade basis. So take a look at that video, a very, very good video to get you started to having a solid risk management plan. So now that you know how to avoid a devastating loss, hopefully some of these things can help you and give you the curiosity of not being irresponsible when you're trading, have some joy, and gain stock market experience in a safe manner. Here's a book recommendation, a really good one, Unknown Market Wizards by Jack Schweiger. This author interviews unknown market wizards that only trade their money. They do not trade anybody else's money or work for a firm. And you can hear their journey, and you can hear how they trade, when they trade, and you will see that the commonality in all of them is that they have solid risk management rules. I'll leave you with this. It doesn't matter what, when, or how you trade. You must have risk/money management rules. Trade safe. Thank you, and God bless.